Do you want to know more about how renewable energy will develop in the future? There's nowhere else to look. In this video, we'll cover the latest breakthroughs in renewable energy technology, including solar and wind power. We'll also look at how these technologies are influencing how we think about energy use and how they're being utilized to power homes and companies all around the world. Watch this video if you're interested in learning more about the prospects for renewable energy. Now take a seat back, unwind, and let's explore the world of sustainable energy. Prior to proceeding, please ensure that you have subscribed to our channel, and upon completion of the video, kindly hit the like button. That being said, let's begin the video. The direction of Tesla stock has been the subject of a lot of discussion lately. While some predict it will crash to $69, others believe it will likely rise beyond $100 once more, as it did in January. What's happening here, though? According to one notion, Elon Musk has been raising money for his acquisition of Twitter by selling Tesla shares throughout the year. SpaceX is also up for sale. If this is accurate, then the stock may continue to fall lower if they're pushing out a manned trip to the moon, which is what the rocket launch was all about. Is this, however, the case? A few analysts have doubts. To start with, Elon is not a particularly liquid person, and Twitter recently saw a decline in valuation from $44 billion to $20 billion. He used to be able to get whatever lines of credit he wanted, but now he's got all these institutions on the hook for debt that he can't service based on Twitter's business. Elon anticipates that Twitter will turn a profit very soon, but for now, it is barely breaking even. What does all of this signify, therefore, for Tesla stock? There are conjectures that Elon may be moving into his last role as CEO of all these businesses. Given his leverage and the current state of the stock, it may be prudent for him to consider his exit strategy. Some contend that Tesla is still in the lead when it comes to AI chips and battery technology, though. They might have to start licensing this technology to some of its competitors, but that might also be another enormous opportunity for them. In the end, Tesla's fundamentals have changed. Although the stock hasn't been downgraded yet, this could happen in the upcoming months. It's critical to monitor the stock going forward and see where it goes for the time being. All right, let's take a creative approach to dissecting this information for you. Regarding Tesla's stock price, back in January, there was a remark made by someone stating that it will hit $180 in a few months and urging others to purchase. Now, though, they advise holding off and ceasing purchases. The downgrading is still regarded as weak, even though the price objective has been raised to $185. Even still, there have been some doubts over Tesla's future, especially in light of Elon Musk's leadership. The corporation is focused on growth at any costs, even if it means lowering prices to meet demand, even though they aren't overtly pivoting. People seem to be ignoring some basic problems with the company's margins and pricing, though. Investors and analysts alike are beginning to wonder if Tesla's success can last. One individual in particular, Gary Black, who was once a fervent backer of Tesla, has cut his profitability, margin, and delivery projections for the business. Backlogs are decreasing, but inventory is increasing, which is not a good sign. Moreover, there are worries over liquidity and demand for Tesla's vehicles, as well as the fact that competition in China is getting more fierce. The best-selling vehicle from Tesla, the Model Y, is running out of stock in the United States. Conversely, Ford has around 6.5 times as many used vehicles available on dealer lots as Tesla. To me, as an investor for the long run, all of this is just noise. Freshness of the goods is what counts. Elon may think that Tesla's electric vehicles are going to become commonplace, but it's a risky way of thinking. It is not a good thing to lose your pricing advantage when a product becomes commoditized. When it comes to used car sales, even Ford, which is regarded as a traditional automaker, has certain advantages over Tesla. In summary, investors should be aware of some warning indicators, but it's crucial to maintain perspective and avoid getting sucked into the hype. The auto industry is abuzz with debate about Ford and Tesla's performance. Although Tesla appears to be doing well at the moment, others believe that Ford is in trouble because the company lost a lot of money selling electric vehicles last year. On the other hand, some believe that the CEO of Ford may be correct in the long term. It's a somewhat challenging circumstance. Rebecca, one of the participants in the talk, believes that Tesla is unique and shouldn't be compared to other automakers. She believes that since more people are using credit cards and accruing debt, it's unclear what will drive demand for cars in the future. This could indicate that consumers begin to reduce their expenditure, which would be detrimental to businesses such as Tesla and Ford. Someone else in the conversation brings up the recent failure of a bank named First Republic, which raises questions over the state of the economy. However, they also assert that Elon Musk is not to blame, despite the fact that he may be held accountable for market events. The individual believes that Tesla is overpriced, and that, contrary to popular belief, it is merely a car manufacturer rather than a tech business. Lastly, another person in the conversation believes that Tesla may be facing difficulties due to the fact that they have already sold a large number of cars and may see a decline in demand going forward. Additionally, they stated that Tesla is unable to produce the automobile they desire for less than $35,000. For this reason, it may not be a wise choice for anyone looking to purchase an electric vehicle. In the car business, it appears that attitudes about Tesla are not entirely unanimous. But one thing's for sure, things are changing fast, and it's hard to anticipate what will happen next. Tim discussed how naive it was to believe that Tesla had a long-term demand issue in one of the video clips from 2019. Tim maintained that Tesla was doing quite well in the long run if you zoomed out and looked at the wider picture. With the least expensive electric vehicles available, it was spearheading the movement. Tesla would be a big success if it builds and sells 19 million vehicles by 2030, as promised. The stock would rise as Wall Street expressed its admiration. Elon Musk recently declared he will use the proceeds from the sale of certain Tesla stock to finance his space exploration endeavors. Even though some investors could find this news alarming, it's crucial to remember that this choice shouldn't have a big effect on the company's overall performance. It's important to keep in mind that Elon Musk has already made choices along these lines, such as selling PayPal to concentrate on SpaceX and Tesla. Both businesses have prospered and grown in spite of these changes. In addition, Tesla has a solid business plan and a capable leadership group in place. The business is constantly inventing and growing its product offerings, and it enjoys a strong brand and a devoted consumer base. Even if Elon Musk decides to sell any of his shares, these elements ought to keep the business successful. Naturally, some investors with limited vision may react badly to the news, but it's crucial to keep in mind that these investors could not be considering the company's possibilities in the long run. As with any financial decision, it's critical to use caution and weigh all pertinent information. In the present day, Tesla continues to encounter certain difficulties related to demand. The corporation will do everything it takes, including lowering the price of their cars, to boost demand. Given that this is their fifth price reduction, customers may start to question if they will continue. Concerns exist over this strategy's potential impact on Tesla's future performance. Tim, though, believes that Tesla's valuation is a greater cause for concern. Compared to Ford or GM, the company is selling at 42 times next year's earnings. This indicates that Tesla is pricey and that its valuation may need to approach that of these businesses. It's also interesting to consider how many more cars Ford and GM will sell in 2030 than Tesla. Many individuals have high hopes for Tesla's future achievements. There is a significant growth possibility for Tesla, since they believe that they may sell 10 times as many cars in 2030 as they did in 2022. Are you among those that exude confidence? What are your thoughts on these advancements? Remember to give this video a huge thumbs up and share your thoughts with us in the comments box below. Additionally, confirm that you have a subscription to Tesla Stock News.